Over the last 3 months, I've been using an options trading strategy that has a 100% win rate. It has never failed me. So in this video, I'm going to be sharing this strategy with you. That way you can make some consistent profits. Are you ready? Let's get into it. If you're new here, my name is Greg and I make videos about the stock market and options trading. And if you enjoyed this video and you gained some value out of this, make sure to leave a like and subscribe if you haven't already. Today we're going to be talking about the LEAPS options trading strategy. So first I'm going to be going over what this is and who the strategy is for. Then I'm going to show you the best stocks to use this options trading strategy on. And finally I'm going to show you how I've been using this strategy, how much money I've made, and give you proof of my 100% win rate. First off, if you don't know already, LEAPS stands for Long-Term Equity Anticipation Securities. This acronym makes no sense because it's missing a T and there's a P in there somewhere, but let's just go with it. As the name suggests, this is a long-term options trading strategy in which you buy a call or a put based on the direction that you think a stock is going to go in the long term. Now, the expiration date for your option can be any day you want, but generally for LEAPS it's about 1 year out. I personally prefer to use 6-month expiration dates because it brings the cost basis down, and I've also found them to be just as effective as 1 year expiration dates. And this options trading strategy is literally so simple. I'll show you on Robinhood. If I think that the price of Apple is going to be going up long term, which I do think it will because it's Apple, it continues to grow, it's almost at $500 now, it's insane. We'll go to their options, and I'll set my expiration date for January 2021. So the cost of these options in comparison to something like September 2021 are probably going to be about 60% cheaper. So at the money, they're going for $4,100. And if we scroll to the September options chains, the ones at the money are going for $6,800. So you can get the 6-month expiration dates for about a $3,000 discount. And I know you might be thinking with this January call, $4,000 is a lot of money to put down on a single option. You can always go further out of the money in order to bring your cost basis down, but these do get a little more risky because they have more time decay with them, and they also have a lower delta. So you won't be making as much money for every dollar that Apple stock moves. If you were to buy something like the $600 call expiring in January 2021, the delta on this is only $19 for every dollar that it moves. You'll gain $19. And then the Theta, for every day that Apple stock doesn't move, this is going to be losing $10. If we compare this to the at the money $480 call, this has a delta of $52. So you'll gain or lose $52 for every dollar that Apple moves. And then the Theta is only $15 a day. So generally with LEAPS, you want to be as close to the money or as far in the money as you can be, because the high delta to Theta ratio will help secure your option. So if Apple were to move $25 and now be $500, this would gain you 52 times $25, which is $1,300. Meanwhile, the other one, the delta, was about half of that, so you'd probably make around $700. So to recap, if I think that Apple stock is going to be going up, then I'm going to be buying a call option with a 6 to 12 month expiration date, and the more that it costs, the more money that I'm going to make for every dollar that Apple moves. This is basically just like buying the weekly option contracts, but your chance of profiting is a lot higher because you have more time for the stock to move in the direction that you're predicting. If you're trying to buy LEAPS options on stocks like Apple, Microsoft, or Facebook, they're going to be a lot more expensive. But if you believe in something like Bank of America, you can buy a $20 call option expiring in June 2021 for only $700. In general, stocks tend to go up, obviously depending on what stock you're actually buying into. So let's talk about the best stocks to use this options trading strategy with. Generally, you want to pick stocks that have a consistent trend. So this is like the FANG stocks. They are very consistently going up. That being said, you can also buy LEAPS on ETFs such as SPY and QQQ, and these are going to be a bit cheaper because they don't move as much. Overall, the US stock market has continued to go up, so this LEAPS strategy is pretty effective with ETFs. Options on ETFs are also a lot cheaper in comparison to buying into a stock because they aren't predicted to move as much as something like Apple or Tesla. So right now you could pick up something like SPY $300 call options expiring in September 2021 for under $6,000. Whenever you're buying ETF LEAPS, you're going to have to hold these for a little bit longer because these ETFs don't move as quickly as the stocks do. But whenever SPY gains $10, you're going to be making about $700 in delta. As long as you think that a stock has a consistent pattern, then that is a good stock for this LEAPS strategy. If you think that a stock is going to be going up long term, you're going to buy a call option, and if you think that it's going to continue to trend down, something like Aurora Cannabis, something like USO, then you're going to buy a long-term put on that company. You can also use these as a hedge against a large position in your portfolio. So if you think that there's another market crash incoming and you think we're going to enter into another bear market, then you could buy a long-term put on the S&P 500. If the market does continue to go up like it has been, then that put is going to be losing a lot of value, but the money that you have in stocks should counterbalance that. That is sort of a different strategy, and I don't personally use it because I am very bullish on the stock market and I don't think that it's going to be coming down anytime soon. And speaking of strategy, let's go over my own so I can show you what trades I've made over the last few months and how much money I've made using this LEAPS options trading strategy. This here is my options trading spreadsheet. So this has literally every single options trade that I have made since March 5th of 2020. Obviously, I have taken some losses, but these were when I was playing weekly options. So I was buying an expiration date of March 13th, and I bought this on March 5th. So you can read through these. So this one expired same date, bought it on the 6th. I did lose most recently on Nvidia, and this was a monthly call debit spread. This was expiring sometime in September, and I did take a loss on that. But if we take a look at all of my long-term expiration dates, such as this Square call, I made $530. On this Square call, I made $550. On this Netflix call, I made $220. So there is a consistent pattern with me buying these long-term call options. Generally, they're profitable. The largest profits that I have seen have been on Apple and Square, and this was last month when they had their earnings report, and I guessed the direction correctly, luckily, and I made $1,100 on Square and then $1,500 on Apple. So I had these 470 call options expiring on December 18th. I bought these for $608, sold them for $910, so I made about 50% profit on these. And if I had actually held these are going for around $3,000 now. So this position would have gone from $3,000 all the way to $15,000 if I had actually held it. But we don't win them all. So you can see most of the call options that I've placed have been on Square, Roku, a bunch of tech stocks, Apple, Microsoft. So generally the FANG stocks are really good for this strategy. And I don't personally use this on something like SPY or QQQ just because there's not as much money to be made, and I do believe in the future value of these tech companies. So I'm definitely going to be sticking with the strategy and probably going to stop playing the weekly options and then the monthly options because that is usually where I take the L. But I've yet to take any losses on anything that has more than a 3-month expiration date. So obviously, this strategy has been working for me. I've made over $9,000 in options trading by using the strategy. So this is definitely something that I'm going to continue to use moving forward. And just to give you guys a reference, I do have a $31,000 account. So I would probably suggest this if you have like over $20,000, over $25,000, and you're willing to put up for $5,000 on an option. That's what I've been doing, and I've been seeing returns of $500 and up. So I would definitely suggest going heavy with these positions, buying closer to the money or in the money if you can, to capture gains on the higher delta. And if you guys want to keep up with what investments I'm making on a day-to-day basis, I post all of my trades over my Discord. You can go check it out. It's going to be the first link down in the description. We have over 200 members in there, and it's pretty poppin', so come join us. All right, thanks for tuning in, guys. Remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.